This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May 20th, 2011 at approximately 8:45 in the morning Mountain, 10:45 Eastern Time. Our radio show runs on AM 640 in Toronto, Saturday morning at 8, 6:30 CHED in Edmonton, 3 o'clock in the afternoon on Sunday. We're on a little early this week due to hockey. By the way, those that listen in Edmonton, next week, we're not too sure when we're going to be on. We should be on at our normal time, but if something does change due to hockey, listen to 630 CHED, call the switchboard. They will let you know when we're on next week. It's all dependent on hockey. Crazy week. The United States hit their debt ceiling. Also, we had the scandals involving Arnold Schwarzenegger and Dominic Strauss-Kahn. And then, unfortunately, here in Alberta, we were dealing with the fire in Slave Lake, and our hearts and thoughts and prayers go out to all the people there. Very, very difficult time for the people of Slave Lake, very similar to what happened in Kelowna back in 2003. But, Harold, it was a very, very busy week, and precious metals did fairly well.
You better believe it. Again, right now they're trading in a range, because the market, let's face it, it did come down very heavily from 50 all the way down to 32 and change in a matter of 4 days. So again, a market's got to recover from something like that, and that's exactly what the market is doing at this point. It's rebuilding a base. And, the thing is that we've seen this now, I guess it's 9 times in the last 10 years that the market has done something like this. But the fact is that it's something that we have to live with. There's volatility in the market. And the fact is that when silver came from 50 down to 32 and change, and basically there's very, very heavy support, just so you know, at $32. That's why it's had so much problems breaking below the $32 level. But we're as close to the bottom of the market, I believe, as we're going to see. I think the market will hold that $32 level very strong, and basically we see the market building a base at around $34, $35 throughout the summer, and then we anticipate once we're through with the summer going into the fall that this market is going to take off again and then retest that $50 level. I don't think silver's going to have a big problem getting through $50, just like gold didn't have a problem getting through $850. So again, I'm very bullish on the market. Nothing has changed at all. But again, when these scenarios happen, as mad as we get about it, the fact is that at least the market is performing the way it's supposed to. I would have been concerned if silver went from 50 down to 32 and then all the way back up to $45 or $50. That is not the type of market that we necessarily want to see. Now, again, if the market did come down for whatever reasons, and we know what the reasons are, the fact is that's something that we have to live with. I've mentioned on almost every show that we've done for the past decade not to heavily leverage your positions. And basically there's a huge difference between paper silver and physical silver. And we've always said to be in the physical metal, because basically you're going to move dollar per dollar with what the market's going to do, and that's what you really need to do if you're going to make money in the silver market. We believe over the longer term that silver is really going to take off and get into the triple digits. So basically to be able to buy silver at this level, I think, is a real amazing opportunity, because when silver hit 50, the buying was in a frenzy type of thing. Everybody was running out and trying to buy silver. So obviously if they were trying to buy silver heavily at 50 and it dropped down to $32, $33, $34, it's got to be a steal at this level, and that's exactly what I think it is. I believe that silver is going to go substantially higher. I think by the fall we'll see this market take off again, just like it did last year. And just to remind you what happened last year, silver was trading at the end of July at $17.10. 90 days later was at $30. Don't forget, the market started off this year at 30, dropped down to 28, and then made a major run all the way up to $50, almost making a 50% increase in just half of the year, or in the first quarter of the year. So that's how strong silver is, and there's a very good reason why silver will go substantially higher. Number one is because of supply and demand. The demand is extremely high, the supplies are very low. Number two, silver's a dual metal. It's not only good as an industrial metal, so as the economies do perform better down the road, silver is a key component in that. But also, silver and gold respond to inflation and monetary problems better than almost any other investment. So again, silver is a very important asset. And again, to be able to get it back down at the $34 level, I think is a steal at this point, and silver prices should move substantially higher. Again, I see very heavy support in silver at $32, and basically we do feel by the end of the year, once the summer is over, that silver will take off again and basically retest that $50 level. We do believe that there's major buy orders in silver above 50, so once those levels get hit, we believe that silver will make a quick run to $55 or $60. So again, to be able to buy silver in the $34 level as you can right now, I think is a tremendous opportunity, and I would be a major buyer of silver at this level. The gold market has hardly sold off at all. That's the funny thing about it. Gold is basically still trading right at around $1,500. So basically, silver has not silver sold off for, again, the reasons that we talked about on the last two shows. And basically, I think that was a force down in the market that happened on a Sunday evening at around 10 o'clock when no traders were trading. But again, if you're in the physical metal and you're owning physical silver, that should not be an issue. Another thing that I truly believe is happening in silver is that there is so much silver being purchased by the institutional investors and by these hedge funds and that type of thing, that basically they bought so many silver ETFs, again, buying paper assets in silver, and that's what crumbled. So basically, I believe that they sold so much silver that the exchanges cannot deliver against the outstanding contracts. And that's the same scenario that happened in 1980 that caused silver to go from $50 all the way down to $26 in about a week of trading. So again, if there is not enough silver to cover the outstanding futures contracts, I think that's the most bullish situation that we actually have, because it shows that there's a shortage in the market, and that actually will confirm that there's a shortage in the market, which is extremely bullish. Now, the gold market is trading right at around $1,500. There's heavy support at $1,450 and $1,380. And again, I do anticipate that the markets can drift lower during the summer times, especially with a lack of traders. During the summertime in Europe, traders, and people will take a month, 2-month vacations. On top of that, we see similar situations in the States and in Canada, and basically the traders go away for the long weekends and the trading is light. So we do anticipate that silver and gold will trade in a range during the summer and break out at the end of July, August like it did last year. So again, any pullbacks in the market is a buying opportunity, and I would be a very heavy buyer of gold and silver at these particular levels. Again, silver is building a very strong base at around $34, and there's very heavy support at 32. Now, the fact that it didn't spike back up, again, shows me that we've got the same market conditions as we've seen in the last 8 or 9 pullbacks that we saw that were very similar to this, which, again, in my opinion, is a comforting situation. I know there was a lot of analysts out there that did believe that silver was going to come right back up to 50, and I was hoping that that wasn't going to happen, because that's not an orderly market, and again, we do not want to see that happen, and obviously it's not happening. So in my opinion, that's a very, very bullish scenario for the market. Again, I'd be a buyer of silver on any pullback. I think buying silver at around $32 to $34 to $35 is a steal. The other thing is that Randy touched on it at the beginning of the show. The government, the U.S. government, is in financial trouble again. About a month ago, it almost shut down because they couldn't pay their government workers, and basically we're going to let go or not pay about 800,000 workers and not pay the military. At the last minute, they were able to rectify that situation, at least for the short term. Now the government is in trouble again over that $14.3 trillion debt ceiling. You see, the United States is tapped out. They've spent so much money that they're at $14.3 trillion, and Congress doesn't want to go above that. And basically, they have not come through with a game plan. At least President Obama has not come through with a game plan to rectify the situation. So is it just a matter of throwing good money again after bad? Are they going to come up with another $1 trillion or $2 trillion basically to be able to pay government workers and keep the government going when they haven't come across with a game plan? So basically, this is a domino effect. We talked about this for years now, and again, everything is falling into place pretty well exactly as we saw it happening. So basically, the U.S. government is in gigantic trouble. But then again, so are other governments. Look what's happening in Europe with the sovereign debt situation. It's getting worse and worse and worse. In fact, a week and a half, almost 2 weeks ago, the euro was testing the 150 level, and now because Greece and Italy and Spain and Portugal, again, are in such huge trouble financially that the euro has pulled back, and that's why the U.S. dollar has moved up about 50 cents this week. All in all, Europe is in huge trouble. The United States is in huge trouble. China is raising interest rates for inflation, which is what should be happening in the United States, but there's no way in the world that the U.S. is going to do that, at least to the level that they have to do it. So again, in China and in Europe, they're raising interest rates, which is going to push the U.S. dollar lower. The other thing is that do we believe that the U.S. dollar is a strong currency? If we believe the U.S. dollar is a strong currency, we shouldn't be investing in gold and silver. However, that is not the case. The fact is, the U.S. dollar is a very weak currency, and even though it's moving up slightly at this point, it's only because that the problems, at least short term, in Europe are as bad, if not worse, than what's happening in the United States. There is no doubt in my mind that the United States Federal Reserve will not raise interest rates within the next 2 years. In actual fact, I believe they will follow suit and continue to keep interest rates at almost zero. And if that's the case, then we have to be buyers of hard assets. Gold, silver, and diamonds will continue to skyrocket in price as the U.S. dollar continues to fall. In fact, the only thing that's holding up the U.S. stock market, in my opinion, is the fact that the U.S. dollar is weak and there's money coming in from Asia, Europe, and anywhere else where their dollar is stronger than the U.S. So all in all, I do not see anything happening positive that is going to change my outlook for my recommendations on hard assets. I would be a major buyer of gold and silver and diamonds during the summer and during every opportunity that you have, because we are going to see massive price increases in all hard assets going into the latter part of this year. So again, when the markets are soft, that's the time to jump in and take advantage of it. The U.S. government is in such huge financial trouble that they may not be able to pay their debts. In fact, the interest on the unpaid debts are so high that it almost costs 50 cents out of every dollar that the United States government brings in tax revenue. That's a recipe for disaster, and again, will push the U.S. dollar continually lower, and that will push the price of gold and silver substantially higher. I do believe by the end of the year, we will see gold at about $18.50. I believe in silver, we'll retest the $50 level. If we break 50, which I believe we will, we'll see a quick run to $55 to $60. So again, to be able to buy it at this level is a phenomenal buy, and I'm a major buyer of gold and silver at this level.
Jim Sinclair came out this week and said, times have changed. Change with them and prosper. If you choose to fight change, you will financially perish. That from Jim Sinclair, who is very bullish on precious metals. To invest in precious metals, the telephone number 1-866-623-2002. There's only one company that Harold recommends. That is Worldwide Precious Metals. Their website is www.pmc.com. They are the experts in this very specialized market, precious metals. They're the only ones you need to talk to when it comes to investing in precious metals. They have lowered the minimum amount that you need to invest in when it comes to investing in silver. That is 500 ounces. So speak to them. The minimums have been lowered to 500 ounces to be involved in the silver market. You can also talk to them about gold, platinum, and palladium. The website, www.pmc.com. The telephone number, 1-866-623-2002. You can get our free weekly newsletter, and they'll be happy to send it out to you via email free of charge every week. It is a must-read. It's a companion to our radio show, and it's going to educate you as to what's happening. We have brand new information every week. It's an easy read, a quick read, and it's going to keep you up to date and help you profit and protect the money that you work so hard for every day. We need to profit and protect that money. Coming up this week, Marianne Bartles, head of the Technical Analysis Department at the Bank of America Merrill Lynch, stated that the uptrend in the silver sector was not over, despite the recent silver price correction. She argues that silver is likely to hit the $50 mark again before the end of the year. but that the COMEX all-time high of $50.35 per ounce reached in January 1980 will likely form a key resistance point on the price chart. She added that the silver price had the potential to reach $80 per ounce in the next 3 to 5 years. Also coming up, and this is one of the most important things you can read or watch all week, and we actually have a